All right, let's take a look at Shopify. This bad boy crossed the millennia mark. That's right. You got that right. So, you love to see it. Definitely really good for this stock. If you're a shareholder, no doubt. This thing is shot up 10% after earnings. Really 9.5%, but it is what it is. So we're going to take a look at these earnings, and again, this is the environment that is so poised for this company to succeed in, and I'm guessing that's why. So we'll take a look at the earnings and see what exactly they've posted. Well, from an EPS standpoint, what I would say is an incredible beat. I mean, this is revolutionary for this company. We're talking about a non-GAAP EPS of $1.05, beat by $1.03. Massive beat there, obviously, but I care about the GAAP EPS. GAAP EPS of 29 cents beats by 87 cents. So this is a company that should not have been profitable by any means, and hasn't been, really. And they just posted a good profit. Holy crap. It's crazy to see that. You love to see it. Revenue, that's right. I think you're reading that right. $714 million, up 97% year over year. They doubled their revenue year over year. What can I say? I told you it's happening. I told you were going to see this. They beat by $202 million on that aspect. Doubled their revenue. Holy crap. And it's not a shocker at all. Every company has to turn to e-commerce. And Shopify is really the one to turn to. There's no doubt about it. So they get a massive benefit from it. Gross merchandising volume up 119%. So the merchandise flowing through this company was $30.1 billion versus a consensus of $19.9 billion. Oh my gosh. Subscription revenue rose 28%, to $196.4 versus $192 million expected. So you see really the main thing there is not necessarily more users for the most part. I mean, seeing subscription revenue rise 28% does show that more people are using the platform, but the fact that the gross merchandising volume over more than doubled just shows you how much e-commerce is being done this quarter and will continue to be done. Because there is one thing that needs to be noted about the current issue going on right now, right? This has fast-forwarded society quite a bit. When you talk about people working from home more than ever, and will continue to after this, school getting done from home, shopping getting done more often online. That's right. That's what this has done. So there is a benefit somewhat, if you want to think of it that way. I mean, you got to look at the positives, right? I mean, in my opinion, you do. So, Shopify reports gross. Oh, look at that gross merchandise. Gross merchandise value growth in April and May before decelerating in June and thus far in July. Not a shocker. So you don't expect as big of a quarter next quarter because, well, I mean, everyone was locked down. They could only buy stuff online. So what a shocker. But I still think, regardless, you're going to see more benefit than not, in the future here. So merchant revenue of $517.9 million, just smashed consensus, and monthly recurring revenue rose 21%. So, updating from Shopify, while data from the 15th of June to the 19th of July indicates new stores created during the extended 90-day free trial are converting into paid subscriptions, which is massive for them, at a slower rate than merchant cohorts that joined Shopify prior to the pandemic. So some people were trying to bank on really everything going on. And, you talk about maybe mask craze, people selling masks. Maybe that's part of it, but not everyone's going to continue online business necessarily. So Shopify didn't provide any guidance for quarter 3, which is somewhat of a safe bet, I guess, because it's kind of hard to tell. And you can tell they don't really know what's going on. But, it leads up to a story where you could have a bad result next quarter as far as what investors are looking for. Not actually a bad result, but maybe as far as what investors are looking for, it could end up being not as beneficial for them, right? So, and again, I don't know if that's necessarily going to be the case, but you got to prepare yourself. Maybe they're afraid next quarter won't be as good for them. Maybe. As far as the slides, which we love to look at the slides, this woman is doing some things. She's got definitely some OCD triggering stuff going on here. It's just a cluttered mess, I swear. Too much stuff. Please, lady. Retail is changing. Thanks. That's very inspirational. I'm going to highlight that because I didn't know if you understood that retail is changing. But, yeah, the main focus is, Shopify can be used everywhere, baby. Shopify is meant for everything. So, again, we talk about, let's zoom this out just a wee bit, okay? Just kidding, we're zooming in. Obviously, their basic platform, the less involved platform, is meant for small business, really entrepreneur startups, those who are making sales online. Typically are going to be those your creators like jewelry makers who are just trying to make a living online, or at least make some extra income. They want to start their own business. In the middle there, you typically see your Shopify normal plan, which is more meant for small businesses and the higher end of entrepreneurs. Then towards the higher end of small businesses, you see the advanced plan. And the very top plan is going to be the very large companies like Walmart and the like, which is the most advanced plan, but the most beneficial for online sales. So the total addressable market for small businesses, they see $78 billion potentially. Holy crap. And I don't see that as unlikely. I think it's perfectly possible. Just because of everything going on. These ladies, they have some things in their nose. That looks painful. I can't lie to you. That looks kind of painful. But these are Coco and Breezy. I don't think that your name's Breezy. Is that true? That's fake. No, there we go. Founded by sisters Coriana and Brianna. That makes sense. This is Coco. No, this girl probably goes by the nickname Breezy, and Brianna, I'm guessing, goes by the name Coco. There's a hyperlink in this presentation. Look at that. They love to give, obviously, inspirational stories. Yeah. Her inspirational story is that she sells products like olive oil. Sometimes you gotta cook, especially in pandemic. They give an idea of the larger brands. Heineken moving into the large brands. Lisa marketing the large brands. Jameson into the large brands. A lot of alcohol, apparently. Interesting. But at the top end, you see your General Mills, your Heinz, Gymshark, Staples, Schwinn. How many bikes get sold online? I don't know. Do you need to buy more than one bike every 20 years? I don't know about that, so I don't know how that's a larger brand. Feels like mattress firms to me. I think there's a little bit of a money laundering scheme going on there. Maybe just me. So obviously this program has 4,600 apps, 30,300 agencies and web designers, pretty focused on taking care of their customers, right? They're focused on growth. They award Fast Company's Best Workplaces for Innovators 2020 honoree. So they didn't win it, but they were honored. So that needs to be mentioned, right? Does it need to be mentioned? I don't know about that. But as far as the share of the U.S. retail e-commerce, that's right. Shopify's got 5.9% of that bad boy. Amazon obviously owns it, with other companies really trying to take more of that share. But Shopify absolutely owns the competition. There's no doubt about it. eBay is the only one close. Walmart's doing their thing, no doubt, though. Walmart's doing their thing. Strong, consistent revenue growth, as we mentioned. You see year-over-year 97% growth. Quarter-over-quarter, you saw 47% growth. Whoo, golly. And look at this. This is just 90%, 73%, 59, 47. It's beautiful. 46% annualized growth rate when we're talking about since 2015. That's the history of this company, and that's why this company trades at freaking multiples that no one can even value. $125 billion market cap, when this bad boy is only bringing in, a few billion a year. But hey, it's not me to say who gets the value here. Okay. Strong, consistent general merchandise volume growth. That's right. General merchandising volume still continues to grow as well. More products being sold. Adjusted gross profit, which I don't like adjusted profit, but you see growth there. We do like to see that. You see overall expenses. They are finding a way to decrease overall expenses, which you do like to see. No doubt about it. So, merchant revenue. That's right. Giving more money to the merchants. Definitely, this is the same slide they shared last time. Okay, we don't play around. You can't give me the same slides and think I'm gonna get out of bed for those. Okay, I'm really hopeful that they have. I don't think they do offer me a balance sheet on this presentation, so you wouldn't believe it. I already had the investor relations page pulled up today. I'm kind of a new man. I'm a whole new beast. So they're giving me a 6 months comparison here. So overall total current assets on this company of $4.3 billion versus $2.7 billion of, that's right, 6 months ago. So massive growth there. Want to see if debt rises though too, because that could be a concern. Total assets in general of $5 billion versus $3.4 billion. So a lot of their assets are in current assets, no doubt. From a liabilities perspective, where are they at? Right? Where's the liabilities at? $320 million in current liabilities. Long-term liabilities, $148 million. Where's it at? There's no liabilities on this company. Are you kidding me? Stockholder equity of $4.6 billion. So not only did they not raise liabilities at all, that's right, they didn't raise them at all, but they rose the balance, they grew the assets position pretty big. It's kind of huge. That's incredible. What can I say? I mean, that's a ridiculously good balance sheet. And it makes me happy. I do love this company with all my heart. But, I'm sorry, I can't buy the stock. I can't buy it. Market cap of probably over 130 billion now, off of a stock that only brings in a fraction of that, a small fraction of that in revenue. We're talking probably 1/30th of that in revenue annually. It's concerning to me, but I think you can justify the valuation, right? You can justify it because this company is a ridiculous beast. I mean, last year only brought in $1.5 billion, so if you compare it to that, I mean, they're bringing in 1/100th of it, but so I think you can justify it. I personally can't justify buying at these levels. So if you buy it, oh my gosh, it's up 11.5 now. If you did, I understand your investment in this company is going to be a beast and continue to be a beast in the future. So I'm proud of you if you manage to buy into the stock at the $40 levels. I mean, gosh dang. In 2017, I started investing in 2017. It was $100, and I was like, that's a little too steep. Oh gosh, you hate looking back, but it's okay. We'll be okay. I only missed out on 1,000% gains. I'm sorry.